Students, a very warm welcome to Skholar IAS. This is Rohan Dange, your faculty for EPFO this year. Exam is going to be the month of May, and obviously we have started our preparations in full with a lot of academic fervor. Now, is the discussion is employment funds. Yeah, I hope I'm perfectly audible and visible to all of you. Okay. I believe we can move forward from this. What I was saying was that when we talk about Employment Fund and Miscellaneous Provisions Act, it becomes very, very important. Why does it become so important? It becomes important is because we are writing the exam of the same subject, right? We are writing this exam for the same domain, which is Employees Provident Fund Organization. Therefore, it is needless to say, or it is not very essential to emphasize on the importance of this particular act. Now, to add to that, in 2019, there was an amendment bill also, which was introduced to bring about some changes in this act. So this session today is intended to bring to your doorstep the essential provisions of the act, the eligibility criteria and conditions of the act, and if there is any supporting statutory framework, it is essential that you know about that as well, right? So we are going to take a comprehensive look at the Employees Provident Fund and Miscellaneous Provisions Act. Let's begin. Yeah. So the Employees Provident Fund was instituted by an act of parliament. So basically this is a statutory provision. Now, why was this statutory provision inserted in the first place? What is the spirit or the foundational understanding behind it? Right. In 1952, it was brought about to ensure that people, when they retire, employees, when they retire, they should have some sort of financial cushion to fall back on. But you cannot just create a financial cushion out of nothing. It has to be created over years and years of savings. So the Employees Provident Fund was created to encourage Indians, to encourage people to save more and more from the perspective of securing the life in the twilight of your years, right? So basically, the EPF and Miscellaneous Provision Act and the schemes framed thereunder have been structured as self-applying, right? Self-applying means the provisions of this act are applied to the person who is himself or herself contributing to this fund, right? And the employers of the establishments. Employers meaning the people who employ you within the organization, the owners of the business enterprises, be it private sector or public sector, right? So they are responsible to report the compliance of their own. Compliance is important as regards the execution of any act is concerned. What is compliance? Compliance is basically when you conform to the provisions of a particular act and when you behave accordingly. That is called as compliance, right? So basically the employers of the establishments are responsible to report compliance of their own, whether they have complied with the provisions of the act or not. This has to be reported by the employers themselves, right? Now there are the three schemes which were framed at that in the course of independent India have been the Employees Provident Fund scheme of 1952, the Employees Deposit Linked Insurance scheme 1976, and the Employees Pension scheme 1995, right? Now, why am I talking about these three schemes is because you could be asked in the examination about any of these two schemes as well. So at least you should know in which year they were incorporated into the statutory framework of India. Now, these three schemes basically are aimed at establishing a sustainable and a durable arrangement for people to understand the provisions, and not only that, for the people and the employees to actually save for their future life, especially the life after retirement, life after service, right? sometimes it is termination of service, sometimes you yourself voluntarily resign from service, and sometimes owing to age one has to retire. In all of these circumstances, it is important that the employee or the person has access to some funds so that he or she can lead a respectful and a meaningful life, right? This is also to ensure that there is a sense of savings, there is a sense of investment amongst the citizens, and therefore to cultivate that sense of saving, that cultivate that sense of investment, it is important that the government provides certain foundations, certain platforms where people can actually save, right? So the very basic objective of these schemes is to provide social security and to inculcate amongst the workers a spirit of savings while they are gainfully employed, and to make provisions for their benefit after they retire from the service, for their family or for their family members after their death, right? If the husband dies a premature death, unfortunately, then in that situation the wife should at least get some part of his income as support income, right? So this is what these schemes are aimed at, to ensure financial security to a large number of middle class families and upper middle class families in India. Okay. So the Employees Provident Fund scheme was introduced in November 1952, and basically it was to provide post-service financial support to the workers in general employed in the industrial and commercial establishments of the country, right? So when you talk about applicability, now this is an area which could, this is an area of concern, or rather an area of focus which could be asked in the exam, right? It is applicable to establishments which employ more than 20 employees, 20 or more than 20 employees, whichever establishment will employ these many number of people. The EPF scheme of 1952 will be applicable on such organizations. Okay. As per para 26 subclause 2 of the EPF scheme 1952, every employee employed in or in connection with the work of a factory or establishment other than an excluded employee shall be entitled and required to become a member of the fund from the date of joining the factory or establishment. See, what is important here is to understand that the word entitled and to become a member of the fund from the date of joining. These are the two important operative parts of the statement that one has to learn. That means if you are engaged as a worker or as a employee within an organization which employs 20 or more people, then you're entitled. That means automatically you become eligible for this scheme. That is one thing, right? Automatically. You don't have to do anything. Secondly, the moment you become a member of the fund, you become a member of the fund from the date when you join the factory or from the date when you join the establishment, right? So if any of you who has been in the service in the past, you would understand and you would know that there is certain amount of PF, that is Provident Fund money, which is cut from your regular salary every month, right? So that means from your first salary onwards itself, your PF starts aggregating in your account. The money starts aggregating in your account because it is cut from your salary. It is deducted from your salary on a monthly basis, right? So first of all, it is your right because you're entitled. And second of all, you become a member of the Employees Provident Fund from the moment you join a particular factory or a particular establishment, right? So employees include persons who are employed by or through the contractor or in connection with the work of the establishment, or if you're engaged as an apprentice but not being an apprentice under the Apprenticeship Act 1961, right? That means if you're an apprentice and you are not covered under the Apprentice Act 1961, then you are eligible for the benefits under the EPF scheme. Now it is also important to understand which persons are excluded, because see, inclusion criteria and exclusion criteria is generally asked in the exam. That goes without saying, right? So you should know what is the inclusion criteria and what is the exclusion criteria. So here I have enlisted the inclusion criteria for you, but there is an exclusion criteria also. What is the exclusion criteria? That you cannot be a part of the EPF scheme if your salary or if your take home pay is more than 6,500 rupees per month, right? At the time of joining, right? And if you do not have any current provident fund or employees pension scheme balance under the EPF and MP Act 1952 already, right? So these are the two criteria, right? So at the time of joining, your pay should, if it is more than 6,500 rupees per month, then of course you are excluded from the provisions of this scheme, right? And if you do not have any current, or what you can say, if you do not have any current provident fund or EPS balance under EPF and MP Act 1952, then also you are excluded. So see, again I will repeat, the inclusion and exclusion criteria is of utmost importance from the examination point of view. Okay, now let's move on to understand what is voluntary coverage. So any organization or any establishment is allowed the coverage under the provisions of the act on voluntary basis with the consent of the majority of the employees. That means it is a voluntary thing, right? Voluntary meaning if majority of the employees within an organization, if they want the benefits of this scheme, then the establishment has to align itself with the particular act and the provisions of the scheme. So it is completely voluntary in nature. If majority of the employees within an organization are not in favor of receiving the benefits out of this scheme, then of course they will also be excluded, right? So it has a voluntary coverage, right? Only when the employees want it, only then they will get it. Okay, so this is one of the salient features of the scheme, right? Now, what is the contribution of the employee? 12% of the pay, as simple as that. As I have told you, if any of you who is working and preparing for this exam would know that 12% of your basic pay is generally deducted from your salary and credited into your PF account, right? Now, when you speak of pay, what does it entail? It entails basic payment, basic salary, basic wages. Like for example, my take-home salary is 2 lakh rupees per month. Okay. But this 2 lakh rupees per month is including my basic payments, my allowances like dearness allowance, petrol allowance, newspaper allowance, housing allowance, right? And then transportation allowance. There are so many allowances, correct? So the basic component of my salary, suppose the basic component of my salary is 70,000 rupees. It is just an example, okay? Suppose the basic component of my salary is 70,000 rupees, then 12% of 70,000. What is the 12% of 70,000? Right? It is, of course, 8,400. So 8,400 rupees will be contributed by the employee in the, what you can say, by the employer in the employee's account, right? So it is not 12% of the entire take-home salary. It is 12% of the basic salary, basic wages, right? I have given the basic wages definition. Means all emoluments which are earned by an employee while on duty or on leave or on holiday, in either case in accordance with the terms of the contract of employment, which are paid or payable to the employee, right? Now, this includes the cash value of any food concession, right? Or what you can say, this may not include any presents. What are excluded? I'm telling you that. So what can be excluded? The cash value of any food concession, that is excluded, right? On that, you're not getting to pay any 12% of the payment, right? Any dearness allowance, if you're getting, that also has to be excluded. And any present made by the employer, that also has to be excluded. Now, bear in mind that I'm not talking about the 2019 amendment bill yet. Okay, I have not started talking about it. I'm still sticking to the provisions of the 1952 Act. Right, we will talk about the amendment which were brought about in the forthcoming section of this particular lecture, right? So right now we are sticking to the 1952 part of the Act, right? Now here I have provided certain definitions also, because these definitions could also be very well asked in the examination. Like they might ask you what is retaining allowance, right? As a very separate thing, or as a standalone topic, they can ask you what is a retaining allowance, what is basic wages, right? So retaining allowance means allowance payable for the time being to an employee of any factory or other establishment during a period in which the establishment is not working for retaining his service, right? So that is called as retention bonus also at times. You are sticking with the organization for about a year or more than a year, then in that case, you would get what you can say a retaining allowance or a retention bonus just for sticking with that particular organization or sticking with that particular company, right? Now, when you talk about voluntary contribution, the members shall be at the liberty to make voluntary contribution. As you can see on your screens, employer cannot reduce pay. Very, very important. This is perhaps one of the most important elements, or perhaps one of the most important salient features of this particular act, that the employer cannot reduce pay, right? So this is a very important provision which has been inserted. What is going to be the minimum PF contribution? 12% of the pay, right? The employer has to pay 12% of your basic wages at a very minimum level, right? And what can be the maximum contribution which is permissible under this particular act? It is 100% of the pay. Of course, no, logic dictates that no employer is going to pay 100% of your pay and contribute to your provident fund. Of course, that's not going to happen. But as a mere provision, you should know that maximum PF contribution could be 100% of the pay. What happens is that many students get confused. In the exam, they say, what is the maximum permissible limit under the PF contribution in the Employees Provident Fund and Miscellaneous Provisions Act? So instantly, which number and figure comes to your mind? 12%. 12% strikes hammering into your mind, right? But you should understand and you should know that maximum permissible limit is 100%, not 12%. 12%, in fact, is minimum contribution that the employer has to contribute to the employee account, right? Now, when you talk about tax benefits to the contribution are applicable as per income tax rules. Okay. And employer's contribution is equal to 12% of the pay of the employee. Right. Now here I have inserted some more information. When you talk about pension fund, right? I'm not talking about provident fund. I'm talking about pension fund, which comes under employee pension scheme, right? EPS. In that, 8.33% of your pensionable salary is deducted, right? And whatever that is, like when you talk about pensionable salary, the pay or rupees 6,500, whichever is less, right? Whichever is less, that is taken into account, and 8.33% of that is contributed to your EPS, that is employee pension scheme, right? Now this employee pension scheme, why have I taken the pains to insert this? Because I want you to understand that there's a difference between provident fund and pension fund. In pension fund, 8.33% of your pensionable salary is contributed. In provident fund, 12% of your pay minus the EPS is contributed, right? So if you already have an employee pension scheme in your name, that will be deducted, right? And after deduction, you will take the 12% of the pay, right? For example, you're getting 100 rupees as payment. I'm just giving you an example. 100 is basically a very easy figure to understand. Therefore, I'm taking that. Out of that, 20% is your EPS, which is very high, but anyways. So 12% on your 80 rupees will be deducted, right? Not on your 100 rupees, because you will have to deduct your EPS contribution also, which is already rupees 20, right? Now, what is the interest on provident fund accumulation? That also has to be taken into account, right? So the interest that you're getting is 12% till 2000, right? From it was drawn back to 11%. Then finally 2005 onwards, you're getting an interest payment of 8.5%. Okay. In the current budget, which has just been introduced by our Finance Minister Nirmala Sitharaman, she has actually announced a provision that 2.5 lakh of your PF withdrawals or more of your PF withdrawals, they are going to be now taxed. So that is going to be your income, and there is going to be a tax levy on that. So this is a very recent announcement. And since this is a recent announcement in the current budget, obviously it becomes doubly important for your exam, right? So how is the interest calculated? The interest is calculated on the monthly running balance of the member, right? Whatever is a monthly running balance, the interest will be accrued on that particular amount, right? And the interest on provident fund accumulation is exempt from income tax. Now, why have I incorporated this? Is before announcement of the budget, this was actually true, that the interest on PF accumulations is exempt from income tax. But now, after the current announcement, we know that there is going to be a tax if your what you can say, if your withdrawals of your PF are more than 2.5 lakh. So this is a particular change which has been brought about in this year's budget, right? Therefore, please don't get confused. I have already mentioned what was the case previously and what is the case now. Okay. Now, whenever you have money accumulating in your PF account, you can always use it. But for what purposes? This type of question can also be you asked. Which of the following cases are correct with regards to withdrawal of money from your PF account, right? So there are various conditions which I have enlisted here: purchasing dwelling site, construction of a dwelling house, completing the construction of house, buying a dwelling house or a flat from an agency, purchasing a newly constructed or a old dwelling house or flat from an individual, purchasing house flat from a promoter, additional loan for alterations or improvements, further housing or housing withdrawal, repayment housing loan, withdrawal on 54 years or within 1 year before actual retirement, closure or lockout or non-receipt of wages for a continuous period of 2 months, right? Further advance in case of closure or lockout of establishment for more than 6 months, advance for illness of member and his family, for marriage or post matriculation education, property damage by natural calamity, if members are affected by a cut in the supply of electricity, and members who are physically handicapped. Under all these conditions, you can take an advance from your PF account, right? Now let's talk about nomination. Who are the nominees, right? Because see, it's important. You see, your family is generally dependent on you. You meaning the working person, right? The salaried person. It could be a girl, it could be a boy, but generally the family is dependent upon the salaried persons. Now those salaried persons will always have nominees who can take the benefit, or who can get the benefit or enjoy the benefit in case of their untimely death, in case of their instance of the fact in case of their accident where they become physically handicapped, right? So or in case when they are just simply retiring, right? So the family, that is a dependents, should also get a benefit out of this, and therefore nominations are important. So an employee may be allowed to make a nomination conferring one or more persons, right? One or more persons is important. You can nominate one or more persons. If an employee nominates more than one person, right, in his nomination shall specify the amount payable to each of the nominees, right? If there are two persons or three persons, then you should obviously state who is going to get how much, to actually avoid any future conflicts, right? Where an employee has a family at the time of making a nomination, the nomination shall be in the name of what you can say, one or more persons belonging to his or her family. And any nomination made by an employee in favor of a person not belonging to his family shall be invalid. That goes without saying. I don't have to really explain this, right? If at the time of making a nomination, the employee has no family, the nomination may be in favor of any person or persons. Okay. And a nomination made by any employee may at any time be modified by filling form number 2. So basically, what does it say? That there is a provision of changing the nomination also, right? Now, in case when the nomination is in the name of a minor, the member may appoint a major person of his family to be the guardian, right? Like somebody who could be the trustee. And once the nominee reaches or attains the age of 18, then there can be a transfer of funds, right? So this can happen. So this is what you have to take into account when you talk about nomination, right? Likewise, for provident fund, in case of a male member, his wife, his children, whether married or unmarried, his dependents, right? Parents and his deceased son, widow, and children, they are the recipients or the beneficiaries. That is what in case of a male member. So you can just notify it in your copy wherever you're taking your notes. In the case of a female member, what happens is that her husband, her children, whether married or unmarried, her dependent parents, her husband's dependent parents, her deceased son's widow and children, they are all eligible, right? In case of a female member, right? So in case of a male member and in case of a female member, if you have noticed, the nominees are somewhat the list of the nominees is somewhat different, right? So that difference you should note down in your copies, so that in the exam, depending on what is asked in the question, you can answer. If it is a male member, then this is the list, and if it is a female member, then this is the list. Okay. Likewise, for employees pension scheme, for the pension fund, wife in the case of a male member of employees pension fund, husband in the case of female member of the employees pension fund, and sons and daughters including the child which is legally adopted by the member below 25 years of age. These are the beneficiaries. Okay. Now again, when you talk about withdrawal from the fund, members are entitled to withdraw full amount. राइट। आप अपने पीएफ अकाउंट से पूरा पैसा निकाल सकते हो। कब? ऑन रिटायरमेंट फ्रॉम सर्विस, क्वाइट ऑब्वियसली। On retirement on account of permanent and total incapacity for work due to bodily or mental infirmity, right? Suppose you meet an accident, suppose you are permanently disabled or permanently challenged, then you can withdraw entire amount, right? Because you'll have to retire from your service, right? You cannot work anymore, right? You can also withdraw all the funds from your account immediately before migration from India for permanent settlement abroad or for taking employment abroad. Okay. On termination of service in the case of mass or individual retrenchment, in case the organization is rationalizing its workforce, in case the organization is issuing pink slips to a lot of people in the organization, in that case, when your service is terminated, you can withdraw entire funds from your you can withdraw all the funds from your PF account, right? Or on termination of a scheme under a voluntary scheme for retirement, right? We have schemes like VRS, voluntary retirement schemes. So when you're voluntarily retiring from an organization, you can withdraw all the funds. Okay. Also, in case after 2 months of resignation, if there is no employment in your hand, then also under that condition, you can withdraw the entire amount from your fund, right? So under these particular conditions, under these specific conditions, you can withdraw the amount from your fund. Now it is to be noticed here, it is that if you want to take an advance, like for example, your PA accumulation is 10 lakh rupees. And if you want to buy a house and if you want to make a down payment of 5 lakh rupees, in that case, this is like an advance, right? So this is the advance that you're taking. Okay. But in case now, I'm not talking about advance here. What I'm talking about is withdrawal from the fund, complete withdrawal. So complete withdrawal will happen under these circumstances. So there is a difference, right? When you talk about taking an advance, right? In that case, you're giving certain different conditions. When you're talking about uh, withdrawing the entire amount from your account, then these are the conditions which are applicable, right? So just as supplementary reading, what I've done is I have also incorporated the elements of Employees Deposit Linked Insurance Scheme 1976. Why have I done that? Is because in the exam they might ask you, right? So the Employees Deposit Linked Insurance Scheme is basically, what is it? It is a payment of assurance benefit upon the death of the member while in service, right? And what is it linked with? It is referenced with, or it is linked with the average balance in the provident fund account of the deceased member. The person who has died, what is the average balance in the provident fund account? You will just check that, right? And the assurance benefit shall be extended, right? So here, when you talk about membership, who are the members of the EDLI, Employees Deposit Linked Insurance Scheme? So all members of the Provident Fund, they are the members of EDLI also. And what about the contribution? Employees are not required to contribute. Only the employer is required to contribute. At what rate? At 0.5% of the pensionable salary. So if your pensionable salary is 30,000 rupees, right? So what is 0.5% of your pensionable salary? That amount will be contributed by the employer. So you will get the benefits of the EDLI on the death while in service. After retiring, if you die, then your nominees might not get will not get the benefits. But if you are in the service and if you die, then your nominees, whoever you have designated as your nominees, they will be paid an equal amount to the which is equal to the average balance in PF accumulation of the deceased for the preceding 12 months. And if the average balance exceeds rupees 35,000, then the amount shall be payable. Payable shall be rupees 35,000 plus 25% in excess, or 35,000 subject to maximum of rupees 60,000, right? Likewise, you had the employee pension scheme, which was introduced in 1995. So this is a scheme, basically it is for survivors, people who are in old age, and it is like a disability pension scheme. So here the employee again is not required to contribute separately under the EPF scheme, right? EPS scheme rather. Employers are expected to contribute a share of provident fund contribution at 8.33%. So that is diverted to your pension fund. How much? 8.33%. So what does the scheme cover? What is the coverage? It covers death risk risk unconditionality. That is, irrespective of whether such death occurs while in service, away from employment, or after retirement. Now, if you compare that with EDLI, here the death has to be while in service. But when you talk about EPS, then the death has to be that can be any time. It can be when you are in the service after retirement as a pensioner, or when you're away from the employment and not contributing to the fund. In all the three cases, EPS will still be applicable to you, right? So there are what are the types of pensions? See, because these type of questions can be asked. So therefore, I have notified them in your PPTs also, right? So what do you understand by pension? Monthly members pension on attaining the age of 50 years, right? Widow pension is also there, right? When permanent and total disablement during the course of employment happens. Widow pension also happens obviously in the case of the death of a member. Orphan pension happens when and that is applicable to 2 orphan children up to the age of 25 years. And nominee pension also happens in the case of unmarried members. In the case where a person nominated by the member will get pension equal to the widow pension. So in the exam, they can ask you basically what are the types of pensions, right? So it is widow pension, orphan pension. Widow pension is of two types: monthly members pension, nominee pension, right? So there is an early pension of cessation of employment. Cessation means the stoppage of employment. In that case, if your employment is stopped, then you'll start getting an early pension, right? So you get the payment of pension through the bank, right? Any nationalized bank in India. So the members are required to open an account in the bank where the pension is desired. There is a scheme certificate also, right? So what happens is when a member leaves employment, right, or when a member may move from an establishment which is covered previously under EPS but is not, the new establishment is not covered. So before he or she reaches the date of superannuation, he may opt for a scheme certificate, right? For example, now if I'm moving, if I'm making a shift in my job, and if I'm shifting from a job where that organization is not covered under the particular scheme of EPF and EPS, right? So in that case, I will get a scheme certificate, right? Or when I'm leaving an employment, that in that case also I'm getting a scheme certificate. So what does this certificate do? The certificate actually signifies the pensionable salary which I'm supposed to get, and the amount of pension which is due to me on the date of exit from employment, right? Suppose on the date of exit from my employment, I'm due for a 20%. I'm eligible for 20,000 rupees as pension, right? So my scheme certificate will actually identify that kind of money. Now, finally, if I am employed in a covered establishment, right, my pensionable service in the scheme certificate will be taken into account, okay, for working out my full pensionable service, okay? So scheme certificate is like a document which you are getting as a certificate which signifies what amount of pensionable salary are you entitled to, okay? There is a withdrawal benefit of the also. So if the member renders less than 10 years of pensionable service on the date of exit or on attaining the age of 58, whichever is earlier, he or she is entitled for withdrawal benefits also. Okay. Now let's come to the one of the most important aspects of this particular lecture, and that is Employees Provident Fund and Miscellaneous Provisions Amendment Bill of 2019. So here we will talk about, we previously spoke about the act which was originally introduced in 1952. In this particular section, we are going to talk about the amendments which have been brought about in the bill of 2019, because those amendments can be very well asked in the exam. So the Ministry of Labor and Employment released the draft of the Employees Provident Fund and Miscellaneous Provisions Amendment Bill 2019. So which ministry is responsible? Ministry of Labor and Employment. This kind of questions are also asked, right? So we'll take a look at the key amendments which have been brought about, because these become very important from our exam point of view. So what are the key amendments? First of all, there is a change in the definition of basic wages, right? आपको याद होगा तो हमने देखा है कि 12% of your basic salary is contributed by the employer in your provident fund account, right? Now that basic wages, there is a definitional change, right? Because the bill proposes to change the definition of basic wages. Why? Because the government has come out with the Code on Wages bill, which has now already been passed by the parliament, right? So now the definition of wages has changed. So the definition of basic wages has also changed, right? So in the act, wages include all the compensation paid to an employee barring food concessions, dearness allowance, and presents made by the employer. ये हमने देखा है, right? Now the bill, it changes the definition of wages, and now it includes basic pay, it includes dearness allowance also, and it includes retention bonus also, which is retaining allowance. Previously, dearness allowance was not included, but now dearness allowance is included. So the bill changes the definition of wages to include basic pay, dearness allowance, and retaining allowance, right? But the bill does not include bonuses, housing, pension contributions made by the employer, conveyance allowance, overtime allowance, commission, right? So which are the two allowances which are covered? Dearness allowance and retaining allowance. Now in the new scheme of things, along with basic pay, dearness allowance and retaining allowance are included when you're talking about basic salary, right? And all of these are not included. Only two types of allowances are included: dearness allowance and retaining allowance, right? The bill adds the stipulation that if the total amount of payments not included within the wage exceeds 50% of all remuneration made by the employer, it will be included in the wages. Okay. So this is a very important announcement, right? If the total amount of payments not included within the wage exceeds 50% of all the remuneration made by the employer, it will be included in your what? In your wages directly. Okay. There is also going to be a limitation for initiation of inquiries, right? This is also one of the important amendments which has been effectuated. So currently the act does not provide for a limitation for initiation of inquiries into the applicability of the act to an establishment and to determine the amount due from any employer under the act. But this is the status quo. The bill introduces a limitation period of 5 years to initiate an inquiry. So now if you want to initiate an inquiry into the happenings and the ongoings associated with your Provident Fund account, then you have to do it within 5 years, right? And the bill also, or the amendment also, seeks to suggest a time period of 2 years within which the inquiry must be concluded. पहले ऐसी कोई कैप नहीं थी, ऐसा कोई टाइम बाउंड फ्रेमवर्क नहीं था, मगर अब है. Within 5 years you have to initiate an inquiry, and within 2 years an inquiry must be concluded, right? It should come to a conclusion, right? So this is the repetition of that. Increase of fines. So the bill proposes the increase of certain fines by 10 times. For example, the fine for repeat offenses is currently 25,000. The bill proposes to increase this to 2.5 lakh rupees, right? Further, the bill suggests that the offenses should be made compoundable, including offenses by companies, right? So you just have to remember that now the bill seeks to increase the fines to 2.5 lakh rupees, which was till now only 25,000 rupees. Also, there are changes in the rate of contribution. This is one of the most important amendments that the bill seeks to bring about. So therefore, very important from your examination point of view also. So currently the employee and the employer contribution to the EPF is 10%, right? The bill changes the rate of contribution from 10% to 12%, right? Further, the appropriate government may prescribe different rates of contribution for a specific time period or class of employees earning below a certain threshold. So now the governments have been given the flexibility to determine if there is any class of employees which requires a certain threshold, which is below a certain threshold limit, which requires more assistance. So the government can make some adjustments and can bring about some flexibility, right? And no change in the employer's contribution has been proposed. देखिए employee contribution जो है वो पहले 10% था, अब उसको 12% किया है, मगर 12% जो पहले employer's contribution था that remains the same. So confuse नहीं होना. Employee contribution पहले 10% हुआ करता था, now it has been brought to 12%, but employer's contribution was always 12% and it will remain 12%. Okay. So the bill also amends the act to allow for grant of exemption of establishments that apply for an exemption and meet the criteria by the appropriate authority. If there are certain organizations who don't want to be covered, who want to be exempt from the provisions of the act, they can be exempted from the provisions of the act, provided that they meet the criteria which is prescribed by the appropriate authority, right? So if Ministry of Labor and Employment comes out with a set of guidelines under which certain exemptions are allowed for certain type of establishments, and if your establishment conforms to that, then you will get a grant of exemption. That means you will not have to necessarily put 12% into the PF account of your employees, right? So there is a grant of exemption also. Okay. So boys and girls, with this, we have come to the end of our detailed discussion on Employees Provident Fund and Miscellaneous Provisions Act 1952 and the subsequent amendments which were brought about in 2019. So I have tried to cover almost all the aspects of this particular act from the examination point of view. I hope this lecture was beneficial for you, and I hope that in the future also we'll have more such sessions which will reinvigorate your understanding and enhance your understanding, thereby improving your chances for EPFO examination. So till the time we meet next, this is Rohan Dange signing off from Skholar IAS. Thank you, take care, be safe and be healthy.